Morning, SACCI members and friends joining us today, and welcome to another edition of our COVID-19 webinar series. Today, we are engaging in the dialogue with FNB's Regional Head of Business, Andiswa Bata, and she is going to be walking us through or unpacking the impact of the COVID-19 on South African FNBs, as well as measures that FNB has undertaken to support business through this time. So the format of today's webinar, as usual, is we're going to have a brief presentation from Andiswa, who's going to sort of set the scene and provide some context for us of the financial situation at this time, as well as I think in comparison to previous crises that we have faced, a little bit how we as South African businesses, particularly SMEs, can deal with this crisis, as well as the measures, of course, the support measures and mechanism put in place to help us through this time. So following the short presentation from Andiswa, we really, as always, encourage you to lean on the expertise of Andiswa for the next hour and really engage in dialogue with us. You can do that through two ways. As you will see at the bottom of your screen, there's a Q&A box, so you can either type your question. Alternatively, you can raise your hand and we can unmute you, and you can ask your question directly to Andiswa and myself. So welcome to all those joining us today. Welcome to Karen, welcome Florence, welcome Nathaniel, Sandrine, Dr. Yves Guénon. Welcome to everyone joining us here today. Just a quick recap before I hand over to Andiswa. We are chatting today about the impact of the COVID-19 lockdown on South African SMEs, as well as the measures that FNB has undertaken to support business through this time. Please, we encourage all questions. You can type them either in the Q&A box below, or you can raise your hand and we will unmute you accordingly. So I think on that note, it's my absolute pleasure to hand over to Andiswa Bata, who's the regional head of the FNB business. Andiswa.
Thank you very much for that introduction, Amy, and good morning to everybody who's joined. Thank you for your time. As Amy has already articulated, I'll spend about 10 to 15 minutes basically just setting the scene and introducing a few topics for everybody to think about. And thereafter, I'd actually appreciate it if the participants can then also post their questions or comments so that we can then have more of a dialogue versus a one-way conversation. So where I'd like to start is actually just to take a recap of where we stand and how we got to the 23rd of April and what the business landscape has looked like in South Africa over the last few months. Going into 2020, I think we can all agree it was already quite an uncertain business environment. We had Stats SA releasing the fourth quarter GDP figures for 2019, showing that there had been a contraction in South Africa's GDP for that period. In the first few months of 2020, we had occasional power outages, which also had an impact on business continuity. And also we had a lot of currency volatility, which also introduced then a lot of uncertainty as to operating costs that businesses could operate through within South Africa. So that was basically in the first few months. Then came April, which, as we know, has been an even more uncertain time. We've now entered the business lockdown that has been necessitated by the COVID-19 outbreak. We've also had a downgrade by Moody's of South Africa's credit rating into junk status following the decision already made by other major ratings agencies over 18 months ago. And so you combine all those factors, and I think it can appear as if it's a very doom and gloom scenario, particularly for small to medium enterprises within South Africa. Before I get into how we're tackling that, I think it's quite important to reflect. If we look back, this is not the first crisis that South Africa has had to face. And if there's one thing we know from previous crises and previous recessions, it's that SMEs do tend to bounce back. So there is quite a lot of resilience in the system. And I think we mustn't forget that, because all we have to do is rewind to the second half of 2008, which I'm sure some of you will remember very well. You'll recall that in that 6 months between June and about December 2008, oil prices had dropped to a third of their value at the beginning of the period. We had, at some point, the South African rand had depreciated up to 30% of the US dollar. etc., etc. So there was quite a few similarities between the business conditions at the end of 2008 and today. We then entered 2009, where South Africa entered a recession, where there was rising unemployment, which created a lot of pressure on consumers and on businesses. And so I'm not by any means saying that there's a straight parallel between 2008 and 2020. All I'm trying to illustrate is this is not the first crisis. The country is resilient. Businesses do tend to make it and can bounce back. So how can they bounce back? First, I'd like to talk about the measures that businesses can take within their control, and then I'll talk about what the external support exists, including from the likes of FNB. So if we first look at the stuff that's within a business's immediate control, the focus that we always try to encourage businesses to have is, can't avoid it, there is a very big focus on cash is king. You need to protect cash flow. And you need to create a cash buffer for your business that will allow you to see you through the tough times. I think even as we now have witnessed over the last 3 to 4 weeks, there's never been a more important time for businesses to take a look at their cost structure and decide where they can cut costs. The one thing that the COVID-19 lockdowns has taught us is that there are costs which can be cut that we previously may have thought we couldn't live without. I think such costs are the cost of real estate. I think a lot of people, as they work remotely, are now starting to question whether or not they need such such office space. I think that a lot of companies are forcing themselves to ask the question of, do they need to travel as much as they used to and incur so much travel costs, particularly air travel? So I think it's been quite an unfortunate time, obviously, in terms of business conditions. But the one thing the COVID lockdown has taught us is that it's also an opportunity to reflect. There's also new opportunities which have come up. So anything within the healthcare space, anything within online, digital entertainment, etc., are pretty much booming at the moment, as we have seen. We've heard globally that Amazon and Walmart have hired thousands and thousands of additional employees because they simply cannot keep up. Even in the local South African market, we've seen one of the online grocery apps that deliver same day announced that they were going to be employing 100 additional people to keep up with the demand because they are so busy for grocery deliveries. We've also seen a trend in that fashion designers have turned their operations and they are now converting those into making surgical masks because that is where there is an urgent need. And so in addition to the cost cutting, I think we also must never take our eye off the ball in terms of what the new opportunities are that are arising for agile SMEs that can seek to repurpose their staff and shift their offering and respond to where there is an urgent need. The third thing, still within a business's control, is their use of debt finance. So we know that history has shown that in times of lower economic growth, that typically ushers in lower interest rates. We've already seen in Europe and in the US and globally, central banks decreasing their benchmark policy rates from a lending perspective, which in turn allows banks to lend cash to consumers and businesses at a lower rate. That then seeks to stimulate the economy because that money can be used for investment purposes. South Africa is no different. Since the beginning of 2020, the South African Reserve Bank has reduced interest rates by a total of 225 basis points, which now puts the prime lending rate in South Africa at 7.75%. That's substantially lower than it was 4 months ago. And so if a business already has some debt within their business, or they're seeking to take out debt, which we always encourage that businesses do in a responsible way, because obviously you must be able to repay that. Point is, this lower interest rate environment is also providing an opportunity for those companies that can access debt finance or use it in a way that helps to make investment expenditure, not consumptive expenditure. This is an opportunity. The last one I want to touch on within a business's control is things like the lower fuel price. We've also seen that as a result of lower Brent crude oil prices globally, despite the fact that we have a weaker rand, we have had a drop in the local petrol and diesel prices within South Africa on the 1st of April. And there is a widely held understanding or expectation that fuel prices will drop even more on the 1st of May. So all these things collide to basically allow businesses to use these external things that have already happened in their advantage. I then want to spend a few minutes talking about what support exists outside of your business. And the reason why I chose to first talk about what a business can do within its control is because I think for any financier, whether it's the government or a bank or a development finance institution, it's always very good for a business to exhibit what they've done to help themselves from a cost-cutting perspective, from a shifting of business model, etc., in order to then find themselves in a position where they can be attractive for debt finance or for relief funding from other camps. So now I'll talk about what those external options are that do exist. As you know, I work for FNB, which is one of the top 4 commercial banks within South Africa. And over the month of March, we announced certain relief measures, particularly for small to medium enterprises, that will help them hopefully see themselves through this time. Our measures cut across quite a wide variety of interventions. The first is in respect of clients which were already in good standing with the bank, have the ability to apply for a moratorium, which basically means that for 3 months, for up to 3 months, or whatever period is appropriate, a client may approach us to essentially suspend their debt service repayments on their loans with the bank for a certain period of time. So that is the first bucket of intervention. It's around moratoriums for clients in good standing and who had exhibited good financial health prior to the COVID crisis hitting. The second sphere then deals with bridge finance, because we also understand that even where a client did not already have debt finance with the bank, they might now need some sort of working capital finance to get them through the next few months. The third aspect covers ways in which we can assist businesses to facilitate claims from their credit insurance or their business insurance to the extent that there was business interruption cover that would allow a claim under the circumstances of COVID. And then there's quite a few other different interventions, but I think those are the 3 sort of main buckets that exist from a funding perspective. We've also seen the South African government come out with very big interventions, and more recently on Monday evening, I think it was, you will all recall that the president announced a 500 billion rand support package that would seek to stimulate the economy through this time, but also post this time. As part of that, there was an announcement of 200 billion rand of a government loan guarantee scheme that would essentially seek to be rolled out amongst the top commercial banks within the country. And that is still in discussion, and the terms and conditions of that are still being panel beaten. So I'm not able at this stage to give you far more detail in that regard. But what is already out there, as you've seen in the media and as expressed by the president, that will be an effort to assist businesses that generate 300 million of revenue per annum or less, to basically access funding from the commercial banks with a government guarantee of some sort, either partially or in full. We've also seen a number of high net worth individuals and families contribute great sums of money to assist SMEs in this time. Some of the more, some of the ones that have been talked about the most include the South African Future Trust, which was established by members of the Oppenheimer family. That is essentially an opportunity for banks to provide funding to clients using that Oppenheimer money. Although it's quite important to mention that that Oppenheimer money is mainly for salary support. So it's not for paying of other overhead costs. And so I think that's quite an important qualification to make in that regard. We've also seen the Skuma Relief Fund, which is administered by business partners, and that is administering money that was provided by members of the Rupert family and Remgrow. And so there's been quite a wide variety of interventions and support that's been provided to SMEs. And I'm very happy to go into details of any of those should you wish. But I thought I'm then going to pause there, having reflected on the business conditions that allowed us to get here. Second of all, what a business can do itself to help itself in this time. And lastly, that overview of what are the external support measures that exist. I'm going to pause there and hopefully take some Q&A.
Thank you very much, Andiswa. All right, we are now open to take any questions for those who have any. Just a reminder, you are able to ask your questions in the Q&A box below. Alternatively, you can raise your hand and we can unmute you and you can ask your questions directly to Andiswa. Remember today, we really wish to engage in a dialogue, so please do, don't be shy. And please do ask your questions. Andiswa is here to answer as best she can any of those questions at this time. And I think, of course, it's always important to use this platform and really at this time to share the information and expertise that we have. So I have one question to start off with. So please, we have one from Celine, and she says, "Good morning. Can you please elaborate on the bridge financing to help with the urgent cash need?" Andiswa?
Sure. So essentially, the bridge financing simply refers to short-term finance. And usually when we talk about bridging financing, we are bridging to something. So what I mean by that is that a company is expecting that there will be a certain cash flow that will come into the business, either in 3 months or in 6 months or whatever period of time is appropriate. And that there is a proven and well understood source of cash that will flow after a specific period of time. Because that is the true nature then of bridge finance. You are bridging a business's funding needs to a specific point that you have visibility on cash flows from. So quite important, whenever we talk about bridge finance, there does need to be a fair amount of visibility on what that source of cash flow will be in a few months' time or in a few weeks' time or whatever time is appropriate, because that is then going to be the primary source of reliance in terms of repaying that debt. So bridge funding is always very specific, case by case, depends on what that period of time looks like, depends on how much funding or cash flow will flow at that specific point in time. And then, failing which, what other plan Bs exist to help service that debt as and when it comes due.
Perfect. Thank you very much for that, Andiswa. And then we have, it's a pleasure, Celine. She says, thank you. And then we have a more general question. If you can just, Andiswa, just expand on the Oppenheimer Fund.
Okay, great. So it's called South African Future Trust. And if you give me a second, I just want to pull up my direct notes so that I may be able to give you some more crisp detail in that regard. Please hold. Great. So as you know, a number of high net worth individuals and wealthy families within South Africa have contributed towards providing COVID relief at this time. The Oppenheimer family, certain members of the Oppenheimer family, have been very gracious to contribute R1 billion that they sought to put towards support for SMEs. So let's talk a little bit more then about that specific R1 billion fund, which is otherwise known as SAFT, or South African Future Trust. Because the certain wealthy families or wealthy officers don't have the manpower nor the very quick access to a client base of SMEs that might need this funding, the SAFT Trust was established with the intention for those funds to be rolled out through the commercial banks. And that is basically to enable as wide a range of SMEs to be reached within a short space of time. And it's also to basically take a lot of the heavy lifting around due diligence and doing the credit assessment into banks, which that is our primary core responsibility and some of our main capabilities. So it's basically to leverage the bank's client base and access and manpower, and also the ability to process requests quickly and to fund those applications in a timely manner. Now, what are the eligibility criteria for SMEs to qualify for that South African Future Trust? It is SMEs that generate 25 million Rand worth of revenue per annum or less. Those SMEs need to have been in good financial health prior to COVID hitting. And those clients then need to exhibit that as a result of the COVID lockdown, they have then experienced cash flow constraints that are directly linked to the COVID lockdown. There's also then certain other criteria, like the business needs to have been operational for a certain period of time and other bells and whistles. But nonetheless, those are the main thrusts and the main conditions attached to it. What does that type of support then look like? The typical structure, specifically of the South African Future Trust, is that if granted and approved for the funding, an SME will then receive a 5-year loan from the South African Future Trust. That loan amount is then marked as a loan against the SME. However, the money is not paid to the SME because, as I earlier described, that money is essentially, this particular trust is aimed at helping support salaries during this time. So whatever that amount is, it then gets paid directly into the bank accounts of the SME's employees, up to certain maximum amounts. So I think the maximum amount is about 750 Rand on a weekly perspective. And then there is a maximum amount of time in up to, I think, about 15 weeks that a company can seek to continue to access the salary support for their employees. The money that then is marked as a loan to the SME is then marked as a 5-year interest-free loan from the South African Future Trust. And it's basically the intention is that the SME is to pay back that money over time, especially if they can, because I think the one thing that the South African Future Trust is seeking to do is churn that money and use it again as and when other SMEs are able to repay in future, or as other needs arise in future.
Thank you very much. Okay, we have a couple more questions coming through, and thank you very much for that clarity. I think particularly at this time, there's an overload of information, so it's always nice to be able to just get a crystal clear clarity on things of such a personal nature. All right, we're going to move to a question from Florence. Welcome, Florence. Thank you for attending as usual. She has a question which reads, please can you explain more on credit insurance? When is it accessible?
Okay. So I'm going to cover insurance a little bit more broader than just the credit insurance, because there's been a lot of inquiries that have to do with this. So I'm going to first and foremost deal with it in the following way. Noting, please, guys, I'm not an insurance expert, so I will try my very best to explain it. So, for example, I, as Andiswa, have life cover. I have a life insurance policy in my personal name. If I, Andiswa, also own a business in my sole capacity as a sole owner, then typically I can, because I'm the sole owner and that is essentially my source of income, if I were to contract COVID at this time, and that would then lead to me as the entrepreneur and business owner not being able to run my business as I should, that would then allow it typically me as that individual to then go and claim under my life insurance policy to then help with basically even things like the business's expenses for of time that I am then disabled or unable due to illness to do my work. So there's those SMEs that are sole props. In other words, they are businesses that are owned by a single shareholder and an owner by a main entrepreneur. And there, the intersection between personal life cover or insurance and business insurance tends to intersect in that regard. Then we shift into, let's call it a more corporatized enterprise, where there are then multiple shareholders and the business has its own credit insurance. Now, it is not necessarily standard practice that whenever a business takes out a loan with a bank, that there is a necessity to have credit insurance stapled onto that business loan. So if the business did not take out credit insurance when they borrowed initially from the bank or whatever financial institution, it would be very difficult at this point to then try and obviously claim under a policy that doesn't exist. So my next comments are mostly applicable to businesses who took out loans, but which at that time took out credit insurance specifically for those loans. Then in terms of those particular business interruption or credit insurance policies, unfortunately, the wording is very varied according to who your underwriter was. So what I would advise or suggest is that if you have such business interruption insurance, you should seek to go and get the specific underwriter's policy and go through it in detail, because some cover outbreaks for illness such as COVID, but some do not. And so it becomes very, very detailed then in terms of who you insured with and what the conditions of the cover were. There is no blanket answer, unfortunately, for that one.
Thank you very much, Andiswa. So I'm going to move on to Karen, who states, thank you, Andiswa. You were able to answer the question I had regarding the FNB SME assessment, which I recently completed. My company was given the opportunity to receive the staff relief. You've explained that it is a salary support for employees, which has answered one of my questions. However, she has a second question, which reads, is it a once-off payment or will support continue for a longer period?
I believe that it could be in different formats, although I'll have to go and check that for you, Karen. And I'm very, very happy to take that offline and to give you my details. And I will email you a much crisper response. I believe, though, that it is payments that will happen either on a weekly or a monthly basis, depending on when employees would have needed to access that kind of support. I'm not aware of any once-off payments that have been made already, but again, that's something that I'm very, very happy to look into for you, and I will give you a very crisp answer. Thank you.
Perfect. And then we have a question from Celeste from Stratago. Welcome to Celeste. And she asks, do employees of SMEs include the owner, i.e. SMEs with only two owners managing and working in their own business? Can you provide some clarity on that, this one?
Sure. So SME definition is mostly a revenue-based, how do I put it, definition. So a small to medium enterprise, particularly is defined per the Department of Trade and Industry DTI codes. And so what qualifies somebody as an SME is more how much they make rather than how many shareholders or owners are in the business. So an SME could have one owner or 50 owners. It doesn't really matter to be classified as an SME, and to qualify for the different relief efforts that have been discussed would mostly relate to how big the business is rather than how complex the shareholding structure is.
Perfect. And then we have a more broad question and hopefully be able to give an answer to this one. But following from the President's Nation address on Tuesday evening, and of course the big relief, economic relief plan that they're going to be rolling out of 500 billion. The question asks, where do the banks, what part do the big major South African banks play in this economic structure going forward?
So I think there's quite a few ways that the banks are playing a role, and I'll comment more broadly, although obviously can't be held to this because I can't comment on behalf of all the banks, but nonetheless. So banks already are doing their bit in terms of trying to support existing clients through the time, as already articulated. So I think it's a fair comment to say that especially amongst the big four banks, they've all been very good and very quick about getting out there with messaging about what they are planning to do to help either with payment holidays or with bridging finance or additional finance through this time. So that's the first thing. The banks are already doing their bit, I suppose, in terms of existing clients and the measures that have already been announced. Then we talk about some of the interventions that interlock with the government. As mentioned, on Monday evening, the President did announce that there was envisaged as part of the 500 billion rand economic stimulus package that 200 million of that would come from a joint effort between the government and the commercial banks. I had mentioned earlier in this conversation that the details of that 200 billion are still are still a work in progress. So I'm unable to give you very, very crisp information in that regard. I promise I can certainly do so once it is ready, because the discussions are ongoing. But what we already know and what I can already say and comment on is that that 200 billion rand is likely to be structured as follows. So a bank or the big banks will advance funding to SMEs to assist SMEs through this time, and that funding collectively amongst the banks will total 200 billion rand. That 200 billion rand will then enjoy partial or full guarantee from either the South African Reserve Bank or National Treasury. I'm unsure of exactly where that government support would then come from. But nonetheless, one of the government financing entities would then seek to guarantee that 200 billion rand. What that does is that it uses liquidity that is sitting in the banks to allow quick money to reach clients as appropriate, whilst allowing the government of South Africa to essentially stand behind that from a risk perspective. So for lack of a better term, I suppose the government guarantee could or could not be viewed as some sort of security for the funding that banks are expected to advance at this time. As I said, unclear what the tenor will be of those loans or that funding. Unclear whether or not it will be partial or full support. Unclear which government entity would be the one that stands behind those banks' commitments or exposure. And so that is the kind of detail that is currently being ironed out. And I'm sure in the next week, there'll be further detail in that regard.
Okay, perfect. And I think as the French Chamber will be sure to keep all of our members updated on the latest developments as they happen, and to keep you as informed as possible. Okay, I think we have back to a quite FNB centered question, and we have an attendee who's asking, can you expand on the FNB cash relief plan?
Okay, so the cash relief, so cash relief can take the format of many things. Cash relief simply means that we are allowing a business to relieve some of the usual cash that they would have used, because we understand that those businesses are potentially earning less revenue at this point. So you're earning less revenue, we understand that, and yet you still have certain expenses that you need to meet. So how can the bank help to provide some sort of relief between that mismatch between lower revenue but continuing operating costs? So that can then take the form of different ways. If that business already had borrowings from the bank, the cash relief could take the format of the bank assisting that business to reduce their debt repayments for a certain period of time. Or it could take the format of new funding in terms of a new loan, or it could take the format of an increase in an existing overdraft or business loan. So when we talk about cash relief, it's in the format of either lower debt repayments or zero debt repayments for a certain period of time as agreed. It can take the format of new funding or new money, or an increase in additional lines of credit, such as an overdraft increase. I hope that answers the question.
I think so. Thank you very much. And then we have a brave soul who has raised their hand and would like to be unmuted. So Guillaume, can we please unmute Nathaniel Fourie, who would like to ask his question directly. Hi, Nathaniel.
Hi, Bronwyn. Hi, Andiswa. Thanks for the brilliant webinar so far. I'm an owner of a PTY Limited registered in South Africa, and my business is in its 5th year now, but I've been an FNB customer for probably about 4 years. And since I registered my FNB business check account, it took about 3 years before FNB granted a credit facility on my credit card. So I've got a check account and I've got a credit account. And I've been asking throughout the years if it wouldn't be possible to avail an overdraft facility on the check account. And I was just wondering, I know it's based on obviously your cash flow and performance of the business and so on, and your risk profile. But I was just wondering, in a time like this, if kind of easing up on all the red tape and stuff wouldn't be an option or a measure that F&B could consider. Because what happens is that, especially in a time when cash flow is an issue, that once especially now where clients are holding on to their cash flow, like you said, it's good to have a buffer, and people are trying to keep that for rainy days, or they don't know how things will go in the future. So I've already had clients who've kept back on maybe a month or more of the general payment terms. So now my only option is to be transferring money from my credit card into my check account and using that as a buffer in order to keep my employee salary cycle constant. I mean, for example, if my client payments come in after the 25th, that means the only way quite often is that I have to make use of the credit facility to have enough money in the business account to pay out salaries. So I was just wondering if that might be a measure that F&B could consider to kind of ease up on that. I mean, I'm currently phoning you from France as well. I'm stuck in France, and I'm whatever money the business does currently have, I'm also having to look into investing. I've got an employee who's working in France. I'm going to have to start paying hefty sums of money to pay for the French social security contributions and so on. So on the South African front, I'm just trying to get some form of relief to keep cash flow and salaries going on that side as well. I don't know what you could say about that.
Thank you very much.
If I may just direct a clarification question, and then I will certainly answer in more detail. Nathaniel, have you already submitted an application, just so that I know where it could be in the process, or are you simply asking whether or not there may be appetite from the bank to consider such an application? And then I will certainly respond to the rest of your questions. Thanks.
Okay, so I have made applications before, but as you would know, any application is just pretty much referred to a system, and you scored. And I mean, especially in a time like this with Corona, where there's cash flow issues, I don't think anyone's going to score very well. So there you go. I don't think an overdraft would be automatically approved in a time like this.
Yeah, sure. Thank you for that clarification. So you mentioned quite a few things. So I apologize. I'm going to give you a rather lengthy answer because I want to be able to address quite a lot of the things that you raised. Firstly, I wish to extend my apologies to you that you are having to be stuck in a different country at this time and are having to go through quite a lot of potentially, I think, even additional expenditure at this time, as you are unable to travel, and it also prohibiting some of your employees from traveling and what you need to do to support them. So I just want to say I wish you all the best, and obviously not an ideal situation. In terms of some of your initial comments, you mentioned that at this time when there is this COVID, is there an opportunity to potentially cut what you mentioned as some of the red tape? Whilst we are trying our very best to try and make the processes quite accelerated and quicker, some of which has been enabled by us being able to push a lot of applications through our app, where then it's quite automated and, as you rightfully say, is scored. We are unable to completely drop some of the core requirements, particularly in respect of information requirements that are needed for us to grant funding. I know and appreciate that that's quite tricky, given that people are working remotely. It might be quite difficult to access some financial information. For instance, I don't know if certain auditors are still operating. I know that I know and appreciate that you've got stakeholders who are sitting potentially in different locations, and so the typical collation of information that might be required to submit a debt application from a bank is perhaps a lot trickier than it was when everybody was in the office. And so I definitely acknowledge that. However, I think it's going to be very difficult for us to relax some of the requirements. And that is basically really because we are bound regulatory-wise in terms of the minimum amount of information and due diligence that we must do to assess every credit application. But over and above that, we do have a duty to our deposit holders, because as you know, one of the bank's activities is taking deposits from the public and then using those to on lend for lending and funding reasons to those borrowers who need it. So we also are bound by certain risk management principles that compel us to need certain information from companies in order to lend that cash in a responsible way. The last comment I want to make in respect of the matter you've raised is that, yes, there are overdrafts being granted at this time, depending on the turnover in your business. And I'm very happy to take this question offline, because I don't want you to have to share things like your company turnover on this webinar. But I think depending on the turnover of your business, you are either able to apply via the app or through a banker and go through an in-person, I suppose, due diligence process that doesn't just compel you to go through, for example, the FNB app. So depending on whether or not you have a dedicated business banker, on the turnover of the business, on the trading history that we already have sight of, on the financial information that we already have on behalf of your business or not, there are different ways to look at funding and the funding request, some of which could be through the app and a scored credit environment, or some of which could be in what we call the judgmental credit space, which is where a credit officer, not the scored system, looks at a credit application on its merits and there is engagement thereof. So I do think that I know that's quite a broad answer, but without the benefit of having a more detailed discussion on your specific business, it's going to be very difficult for me to even give you a sense of right now what the likelihood of that could be of success.
Thank you very much, Andiswa, for taking the time to answer that. I think in addition to Nathaniel's question, which is of course quite a personal nature as well, we have a couple other questions in the same vein. So maybe I can recommend, if you're open, Andiswa, if anyone has any specific follow-up questions that we can maybe facilitate and put them in touch with you so they can deal with these questions directly. Are you happy with that?
Very happy. And right now, as we continue, I'll post my email address onto the chat for this webinar, which will allow people to email me directly.
Okay, fantastic. Thank you very much, Andiswa, for that. So while she's doing that, I think there's a couple of questions that people have, but they would prefer to be offline, which is completely fine. We understand the situation at the moment. So I'd just like to say, is there any last questions that we do have that you would like to ask in a more general nature to Andiswa here today? Please, this is the last round of questions, so please do ask them now. Otherwise, we are going to finish off. And you are free to email Andiswa, and she will kindly answer your questions in a closed format. Do we have any final questions? I see we have Simon from Polyglot, Eve, Olivier, Blacklight Productions, Karen. Any questions? This is the time to ask them before we end off. So just a reminder to those who joined us a little bit late, we were chatting with Andiswa, who is the regional head of the FNB business, and she unpacked today impact of COVID-19 on the lockdown of South African SMEs, and also some of the measures that FNB has put in place. And she has kindly availed her email address. You can see in the chat box there below. So feel free to direct any personal questions to her, and she will happily help you. Just a reminder as well that if you would like to get in touch with any of our members who are basically dealing with providing support for COVID-19, do get in touch with any of the SACCI team, and we'll kindly assist you. Also, just a reminder that we do have a Q&A page on our website where we have some specialists who are providing some general answers. And of course, if you need some specific information, we'll do our best to put you in touch with the correct people. All right, seems everyone's a bit shy today, and looking forward to the weekend, which is perfectly fine. So I'd just like to say thank you very, very much, Andiswa, and to FNB for availing your time here today, as well as your expertise. I think particularly at this moment, the ability to provide some clarity and some ease, particularly for SMEs, is of great importance. So thank you very much for doing just that. And on behalf of SACCI, I'd like to thank all of the attendees here today. Thank you for tuning in, and we'll keep you updated and informed on all of our platforms and in upcoming webinars to come. And just a reminder, Andiswa's email address is there. If you have any follow-up questions, either direct them to her or direct them to us, and we'll put you in touch with Andiswa as well. So thank you very much, Andiswa, and stay safe to everyone.
Thanks, everyone. Bye-bye.